Well, we'll stay with the insurance industry. Remember, we had the Deputy Commissioner at NAICOM to speak on happenings in that industry. But today, again, we'll tell you that the insurance industry in Nigeria is entering a new phase as the Nigerian National Insurance Commission, that's NAICOM, announces the successful completion of the country's insurance sector recapitalization exercise. The regulator says the milestone mark the beginning of a stronger and more resilient insurance industry, better positioned to support economic growth. The 12-month exercise carried out under the Nigerian Insurance Industry Reform Act 2025 saw 43 insurance and reinsurance companies meet the new minimum capital requirements after a rigorous review and verification process. Now, NAICOM says another 8 operators are undergoing final regulatory checks, with decisions expected within 2 weeks. Well, according to the Commission, the recapitalization exercise has strengthened the financial capacity of insurance companies, attracted fresh local and foreign investments, and boosted investor confidence in the sector. It adds that the stronger capital base will enable insurers to underwrite large risk, settle claims more efficiently, and support critical infrastructure and economic development. And NAICOM says the exercise lays the foundation for a more transparent, innovative, and globally competitive insurance market while reinforcing consumer protection and financial inclusion. The Commission also reassured policyholders that the reforms are aimed at building greater public confidence and ensuring insurance delivers more value to Nigerians. My guest to start the week on the show is the Managing Director and CEO of AIICO Insurance PLC, Mr. Babatunde Fajemirokun. He's also the Deputy Chairman of the Nigerian Insurance Association. Thank you so much. Good afternoon, MD. It's good to have you on Business Nigeria.
Thank you for having me.
It's really good to start the week with you. Let me say it that way. Thanks so much. Well, let's start with this big recapitalization, because sure. I remember when the banks were having theirs, we also stayed on it for so long. Now it's the insurance space. Let me ask that how do you think that really, or what do you first think about the process as being carried out by NAICOM? Let's start that way.
The process has been very transparent.
Wow.
After the president signed the law.
That's the NERA Act, right?
NERA Act, yes. The Nigerian Insurance Industry Reform Act.
Yeah.
Signed last year. There were quite a few guidelines and regulations issued subsequently. And that gave us clarity on what assets were admissible, in addition to the verification process, how long it would take, and the deadline.
Great stuff. But how does this recapitalization of insurance firms strengthen Nigeria's financial sector? The president is talking about a $1 trillion economy. Everybody's talking about that. How does that contribute to that broad goal, that broader goal?
I mean, if you look at what does insurance do? I mean, fundamentally, the first thing would be to de-risk economic activity. So individuals, businesses can now invest, expand, and also take productive risk. And secondly, it also mobilizes long-term capital. For a life insurer, we have liabilities as long as 30 years. That provides a lot of capital to invest in infrastructure, in home financing, and various types of long-term liabilities or assets over the long term. So I do think that the insurance industry recapitalization is fundamental and foundational to a $1 trillion economy.
Really? Now, in your view, would you say this process has created a more resilient insurance industry capable of absorbing shocks and, of course, supporting long-term growth?
Well, like you mentioned that the regulator mentioned that this was the first step, right? Yeah. So capital in itself, the minimum capital from NERA is just the floor.
Okay.
Subsequently, there will be risk-based capital. So if you look at the law, it provides for risk-based capital. So an insurer would need to hold either minimum capital or risk-based capital. What is risk-based capital? It's essentially carrying capital in line with the risks on your books. That's one. So at this floor of July 31st, absorbing shocks going forward is really about ensuring underwriting discipline, investment discipline, and ensuring that the subsequent governance in line with the intent of the law. I believe that with the recapitalization, companies are now well positioned to be able to settle claims a lot more efficiently, in addition to preparation for risk-based capital once they release the guidelines on that.
So there's still, this is just a stage in the process. There's still a lot to be done.
Absolutely. I mean, if you look at the law, insurance companies are required to submit their risk-based capital by March of the following year for the preceding year. What the regulator has done is to get some advice on the exposure of the market in order to design the appropriate framework for the risk-based capital going forward.
Now, investment attraction is something that comes to my mind in this. Do you believe that this exercise, that's the recapitalization of the insurance sector, do you think that will make Nigerian insurers more attractive to foreign investors? And how can this capital inflow be harnessed, of course, for national development?
Very good question. I think that there are a couple of things. If you look at foreign capital, what do they look for? They look for scale, they look for transparency, and they look for a credible exit. Now, with the NGX, for example, that provides a lot of transparency as well as credible exits. The recapitalization has provided scale. Now, if you look at insurance companies, prior to this recapitalization, the last one was done in 2003. So you can imagine the level of capital that insurance companies have to hold compared to now. And looking at that now, insurance companies are well positioned to perform a lot better than they did in the past. Interestingly, if you look at the insurance index on NGX in 2004 and 2005, it performed or even outperformed the entire index. It shows you that investors have been quite interested, both local and internationally, in insurance stocks. Now, we've seen that slow down a bit in 2026, but we would expect that to ramp up later on this year as a lot more insight come into the market on what insurance would do with the new capital that they have.
How will recapitalization improve policyholder trust? It's not just one question. Claim settlement efficiency. Let me allow you to talk about that, because I want us to talk about penetration, because that for me is something that needs to be looked into. I look at the percentage of insurance penetration in Nigeria, and I look at a country like, say, Kenya, South Africa, and I think we have a lot of work to do. So first, how will this help build policyholders' trust and claim settlement?
Recapitalization is just part of the story. I think it's just the start of the journey, right? If you look at NERA itself, there are strong provisions around policy protection, consumer protection, and the reasons that insurance companies could have used in the past to reject a claim is significantly diminished. So going forward, you would find that insurance companies are more willing to settle claims. It might mean underwriting might become a lot more tougher, because you shouldn't underwrite a business if you're not willing to settle that claim. And there are a lot of provisions within NERA to ensure that insurance companies do so when they're required. In addition to that, I do believe that the regulator has been quite adamant, in addition to the Nigerian Insurers Association, which is the trading association for insurance companies. So aside the regulator, there's also ourselves, self-regulation, ensuring that we look for reasons to settle a claim and not reasons not to settle it. And research and data has shown that it's not really about price. It's not really about awareness that people are not taking up insurance. Fundamentally, it comes down to claims. So capital is good, but now how we utilize that capital to ensure that we now bring more people to be covered under insurance will be fundamentally driven by how well we pay our claims and how efficiently we do so.
So the issue of penetration, for me, just recently, when I was speaking to the Deputy Commissioner, I asked him, I remember that we used to, growing up, I used to know that insurance for cars is, my late dad would say, police let me pass. That was what it used to look like just, show it to the policeman. But I think it's getting to become a different ball game now.
Absolutely.
You know, so, but what more are you doing to deepen penetration? It's important that Nigerians have that trust in the insurance companies. So what are you doing, even as a company?
So it's a good question. I mean, if you look at our industry, you would see that there's a lot of commercial lines. There's a lot of retail, but there's more penetration in the commercial business insurance compared to retail.
Okay.
Right? And one of the key things that insurers need to do with this capital is to invest in the technologies, in the distribution, to be able to get insurance to the individual. That requires a different mindset. I think penetration is not going to be driven by just commercial lines. Penetration is going to be driven by retail insurance, embedding insurance into the buying decisions of every Nigerian, and showing credibly that when claims come, it will be settled. One of the key things I would say, I mean, this is not from the regulator, and it's really around the NIA. Our view is that insurance companies going forward will probably at some point start to publish the claims that they're paying.
Good.
All right? How long it took.
Yeah.
And the claims that they actually denied. You would find that we pay more claims than are denied. But the problem is, you know, we always remember the bad news, right? So
rather than the good ones.
So I do think that as an industry, we will do a lot more service to ourselves by showing that we actually do pay claims.
Again, before we wrap this up, I'm thinking that do you expect maybe moving forward, do you see mergers, acquisitions, or something of Nigerian insurance industry? Do you think that would happen?
I think it will. And I'll come back again to this law. I'm emphasizing risk-based capital because eventually what's going to happen in Nigeria is that risk-based capital would be higher than the minimum capital. That's what's going to happen. And if you look at other markets you mentioned that have higher penetration compared to Nigeria, you would find that that's the case. And that's because eventually our currency will probably devalue. You have inflationary impacts. Now with risk-based capital, what happens is that there will be a charge on your liabilities, on your reserves, on your assets, which of course increase with inflation and devaluation. So unlike the regulator now or the industry going back to the National Assembly to increase minimum capital, you will find that that's not the case. All the regulator needs to do is adjust the capital charge of a risk-based capital. And I do think that going forward, that would allow us to be able to transition with the time.
So what lessons would you say maybe regulators and industry leaders like you take from this recapitalization process?
One is policy certainty. Research shows that when there's policy uncertainty, people don't invest.
True.
Right? So once NERA was signed, even coming up to the signature of NERA by the president, you saw that there was a ramp up in a lot of interest in insurance stocks. And I think those interests will continue going forward. Secondly, this law is dynamic. Now, coming back to my point on a country where in 2003, we had 5 billion naira minimum capital for a life and non-life insurer to hold. Now it's 25 billion, right? But look at how long it's taking us to get from changing that law in 2025. What this law does is it's dynamic. So even though we don't need to go back, or the regulator doesn't need to go back to adjust minimum capital, risk-based capital allows us to, or the regulator to adjust it in line with the changes in macros, allowing us to price risk properly, and in addition to that, to be able to support industries without being undercapitalized in the future. And thirdly, I think my final one on lessons would be insurance companies need to ensure that they provide returns above cost of capital.
Returns above cost of capital.
Yes. We must write business for underwriting profit. We should not use this capital to gain market share and undercut each other. It doesn't benefit the customer, and it doesn't benefit the industry. I think one of the key lessons from this is to ensure that we are resilient in 25 years, not just resilient today.
So moving forward, let's say moving forward another 5 years, and this law followed to the latter, what sort of insurance companies are we going to be having in Nigeria?
Well, I think most people like league tables, right? And insurance companies in Nigeria are currently, probably one of the top 50 in Africa. I would think that with the recapitalization, insurance companies in Nigeria would move up to top 20. Yeah. I do think that this is going to drive a lot more penetration. I do believe that it's going to attract a lot more talent. I do believe that we're going to have an industry that is so resilient that the federal government will see a need to ensure that this industry supports that $1 trillion agenda. It's foundational. At the end of the day, we have a lot of objectives of this government. And whether you're talking about underwriting risk or insurance risk, when you're looking at market risk or credit risk, you're looking at operational risk. Insurance companies have the skill and the talent to be able to manage that. And in line with some of the objectives of the president, I do think that there are some risks in this market that without insurance companies handling it, you would struggle to be able to build the momentum. An example would be credit.
Interesting stuff. Before I let you go, you also represent Nigerian Insurance Association, of course. How are they taking all of this too, looking at the development and all of that?
Oh, we were part of the process.
Of course, from the
start. I think, it's one lesson I probably didn't mention. There was a lot more collaboration. So it wasn't about just the regulator or the sponsor of the bill and the Senate just going and doing a new law. There was an engagement with NIA, Nigerian Insurance Association, NCRIB, the Brokers Association, CIN, Chartered Insurance Association as well, and of course ELAN. We have various associations within our industry that provide specific skills across the industry with NAICOM. I remember late night meetings, and I'm delighted with the law that was finally released. And I look forward to a brighter future for our industry.
A lot of work is really being done by NAICOM. I've been in the world of business for some time, but this time around, we hear a lot going on around that space. So we'll get to a point where insurance stocks won't be called penny stocks anymore.
Absolutely. We're getting there.
Mr. Obatide Fajemiruko, I must thank you so much. As the Managing Director, CEO of AIICO Insurance PLC, also the Deputy Chairman of Nigerian Insurers Association, NIA. Thank you so much for starting the week with me on the show.
Thank you for having me.
Thank you very much.